JB Cycles here with an update on October the 6th. So last week I made an early video and I had a lot of views, so I thought I would repeat that. Also, I made a video just a couple of hours ago. You should watch that one. It was about 2-month corrections down to the 200-day moving average is a bullish setup in the bull market. So anyway, situation now. We had this red scenario here, just a bit compressed and early, and then we had finally the pop today. So we have been in this bullish phase in my 4-week cycle for a while now, and waiting for the pop, and then finally it came today. However, early next week is kind of bearish in this cycle, so it is possible with some kind of a double low here. We will come back to that, but this looks like, in my opinion, the correction is over and we should rally. This kind of was a ABC move. It's not that easy to see, but I always look for ABCs, and yeah, I think we have a disguised ABC here and we should rally. So let's see what I have here. Cycles. These are my 3 short medium term cycles. They are all bullish, so the composite is also bullish, but the market made a very late low compared to the composite. The composite wanted to rally already weeks ago, so the composite is bullish into November, and we should see upside into November. And we have a bit longer term cycles. I have listed them here. And the composite of these 4 cycles is also bullish into New Year, early January. We have the seasonal variation. This is the detrended variation in blue, and it has a low around October the 10th, and we are very close to that date. So this is the detrended variation. If we look at just the average variation, actually we see the low is on October the 9th, and there's some kind of a low later in October, but I think this is the important low. We see we have earnings seasons coming up here soon. So yeah, the seasonal variation is bullish for the rest of the year. Wavelets. The daily data for the S&P. So we did kind of take out the potential of this purple wavelet. And the wavelet seems to be turning up. We have the light blue one is going up. The yellow one here is a little bit tricky. It looks a bit distorted. It could turn down. It may just continue up. So I think I have to look at the hourly data for more reliable interpretation. But we broke this trend line, backtested it. We broke this trend line today. So we had the pop. And we are extremely oversold. And that in bull markets is bullish. In bear markets we can stay here at these oversold levels and just go down, down, down. But here we should see a reaction up. But if we go back in this bear market at very oversold levels, we see this one made kind of a double low here. So when we are very oversold, we could get a bottom formation. If we look at this one, very oversold, also a double low. So when getting very oversold, the market may have to make some kind of a real bottom formation before we rally. But we are at this very oversold level. We should have a decent bounce or rally, or call it what you want, that, you know, it should bring us up to at least this, well, around, you know, we should get overbought. We should cross the zero line. We should get a nice rally. It should last probably for a couple of or several weeks. It could be much more bullish than that, but at least some weeks. But first, there is a danger for a double low. Hourly data, Dow Jones Industrial. So looks like we have started a new 2-week oscillation, and this looks like a bullish setup. However, if you look at the purple wavelet, we are getting close to a top here. But if this is a rally, we will continue to rally, although the wavelet is turning down. We will continue to rally, and then, well, if we go back to some kind of a, well, if we look at, that was not such a nice one. If you look at here, we see the wavelet is topping out, but we continue up. We see the wavelet is going down, market is going sideways. That's what happens in when you have a bullish trend or a rebound, a rally. So wavelets, when wavelets suggest weakness, we just go sideways. But there's a danger or possibility that we actually will turn down to make a double low here with this purple wavelet. And also we had some weakness in my cycle next week, so topping out Monday, Tuesday and going down to make a double low is very possible next week. We are extremely oversold in my indicator for Dow Jones, but again, very oversold, like here, can produce some kind of a double low. Again, we see here, we struggled for a while before we rallied. This one made a lower low on higher momentum, so we had the divergence. Here we had some kind of a double low, so always when we are very oversold, we maybe have to make a bigger bottom formation here before we rally. But I think this is a buying opportunity after a 2-month correction down near the 200-day moving average. That's a bullish setup, and we should have a couple or several weeks with rally, and then we have to evaluate whether we seem to break out here or stagnate. Maybe we have to go down for another correction maybe before Christmas or perhaps after Christmas. We'll see. So I think that's my stuff for today, and this looks bullish in my opinion. It really does. Looks like a bullish setup. So the only thing to worry about, my cycle, is turning down into October 12. Then, so here you could say, the cycle is turning bearish, and we should fear a low at the next cycle low. Well, if the correction is over, then we will rally no matter what the cycle says. We are very oversold, and we will get a cascade of buying signals, and those will override the cycle. Meaning, well, when the cycle suggests weakness, we maybe only go sideways. So, yeah. See you on the next one.